Hey everybody, it's John King with Summit Funding. Here we are wrapping up the week of June 17th, and man, has it been an absolutely crazy week. I got to tell you, this will probably go down as one of the most volatile weeks in mortgage rate history. Monday, we had one of the biggest increases in mortgage rates, top 5 worst days in mortgage rates that I've seen in my career and really in recorded history. We had a highly volatile week, and it all started last Friday with the inflation report. So I want to walk you through what happened, try and not get too in the weeds with the technical side of stuff, but help you understand because it's critical. I'm going to wrap up with where are we headed? What's going to be happening this summer? What's going to be happening going through this year? This is all about inflation. If you watch my weekly videos last Friday, I talked about inflation and the fact that the markets, that's the stock market, the bond market, mortgages are a bond, the markets have been thinking that inflation is going to be kind of under control. The Fed's raising interest rates by 0.5% in March, another 0.5% in May, and maybe, just maybe, that's been enough to keep inflation under control. And then we end up getting the inflation report for May that came out last Friday, June 10th, and bam, inflation is significantly higher than anybody expected. Now, why is that a big deal? Because inflation is what's driving up mortgage rates. Because mortgage companies are receiving, and really the bond holders, the investors in mortgages, are receiving a set amount of money every single month for the next 30 years. And if inflation is out of control, then that set amount of money won't go very far. It doesn't spend as much because it costs more for the value of buying anything like bread or gasoline or anything else. So fast forward to this week. Friday, mortgage rates were really in bad shape. Monday, they were even worse because everybody's afraid that, hey, the Fed, whose job it is to control inflation, clearly has no idea what they're doing. Now, I'm being a little mean when I say that, but the truth is that's what the markets were reacting to, is saying, hey, the Fed does not have this under control. Now what? So Monday was a bad day. Tuesday was a pretty bad day. And then we fast forward to Wednesday, and the Federal Reserve does something they haven't done in almost 30 years. It's been since 1994 that the Fed raised interest rates by 0.75%. So they've gone 0.5% in March, 0.5% in May, and now 0.75% increase. And everybody's worried, oh my gosh, that means rates are going to go up on mortgages significantly. Not true. The Fed is acting like the fire hose, putting out the fire of inflation that is currently burning rampant. And everybody thought that fire was under control. So now the Fed realizes that, hey, the fire's not under control. They bring out the big guns. They bring out the fire cannon of the fire hose that's attached to the big fire truck, and they start putting a lot of water on the fire. It doesn't mean the fire is out, but it means that we can calm down a little bit because the Fed has brought out the big guns. They're raising the short-term rate, which is designed to slow down the economy. And when they slow down the economy, inflation should slow down with it. When inflation is under control and starts slowing down, mortgage rates will come back down. That's the key. Now we look at Thursday. So on Thursday, the 16th, we have interest rates come out and they're worse again. Basically, we're back to where we started on Tuesday and we lost all of the benefit we got on Wednesday. You say, John, what the heck's going on? I thought you said that the markets were happy with the fact that the Federal Reserve had brought out the big fire hose. But here's the problem. There's fires all over the world. And so we had news this morning from Europe that they're even more concerned about their inflation. And there's problems happening with the economic issues in Europe. There's problems happening all over the world. And one economist talks about it as many little fires. Think about a forest fire. Think about wildfires. You have many little fires all over. Each of them are a problem. But if those fires come together and join as one big fire, we have a major problem on our hands. That's essentially what's happening right now. We're going to deal with significant volatility going forward. We're going to deal with interest rates going really high and really low. We're in the 5s to 6s, and I don't think we're getting out of that range. I think there's a chance we're hitting the 7s, to be honest. Are we going to get back down to the 4s? At some point, we'll probably get back down into the 3s, but not until inflation is under control. And once we have inflation under control, we're likely to hit a recession, and that recession is going to drive down interest rates further and put us in a better position to be able to take advantage of low rates. But do not misunderstand. Now is the best time to buy a house, and I have multiple reasons why. So check out my videos. I've got them linked down below. If you're watching on my playlist, I've got it linked over here on the right side. There's lots of reasons why now is a great time to purchase a home. Make sure to check out those videos so you understand why you need to make the move today. Thanks, guys. We'll talk to you soon.